We did 76 today. We didn't really do yet 74. Let's just remind ourselves of the analysis. This is what we're looking at. We have been through the labels, of course, since the beginning of the week. There is a correction into a shoulder formation. This shoulder formation relates to this shoulder on the daily time frame. On the daily, we believe the market is moving inside of a leading diagonal. We are attempting to support the 200-point moving average and break out of the leading diagonal. We believe oil is actually supported at $84. 85 here is showing as the upper boundary of the leading diagonal. It will be difficult to break higher, but it's, we believe, very fundamentally supported at $84. And therefore, at some point, we're going to break higher and support, of course, the upper boundary of that leading diagonal. We did reiterate that level 1s and level A's are bounce points, but level 1 and level A in particular can take you down to $75, can take us all down to $75. This is what we are trading. We are attempting to buy between 73.39 or 74 and 76. It's an A and a B, and we want to break out into a C. It is that same leading diagonal, and we are moving, of course, inside of an ending diagonal. All right. Leg B can be very lengthy again. Goes all the way to, could go all the way to $73 showing here. We're looking at this 4-hour chart earlier, and B had not yet finished. It shows an A and a B and a C in red, and a 1 and a 2 in red. All the internal Roman italics, 1, 2, 3, 4, and 5 were still going on. We expect it's going to attack $74.64. So this takes us to the 45 minutes where we were expecting it's going to attack $74.30. Again, the labels are all the same, like the 4 hours, they're all correct, an A and a B, a 1 and a 2 in red, internal 1, internal 2, red Roman italics, internal 3, internal 4. We're just doing 5 Roman italics to complete C and complete high degree B. Okay, is the correction over or not? This is, of course, like the famous question, to be or not to be. We have a cycle extreme probably on the, cycle extreme on the 30 minutes. Bounce support 1. And the cycle extreme on the 15, on the 5, I'm sorry, on the 5 minutes. Unless we had a limit entry long at that level, we probably wouldn't, we couldn't probably take it. Bear with us a second. We have been doing hedges, of course, to protect longs that we may have at 79. That's why we have that red arrow showing. But we believe the market is not yet reversed. We have a 1 and a 2, a 3 and a 4, and that 4 we have a 1 and a 2, 3, 4 and a 5, and we get fractals again. So it's always this internal point rejecting. And because the fundamentals are not changing, we need to see very severe, really, geopolitical escalations or escalations to see a higher oil price. So because the fundamentals are not reversing, we keep having a fractional and internal fracture. So 1 and a 2, 3 and a 4, and then another 1 and a 2, 3 and a 4, and then another 1 and a 2, 3. We reject that point, we fall back. So we are going to stand down, attempt to do an entry end of the week at $75, $75.15. We'll stick with support 2 on the hourly time frames and in between support 1, support 1. Or we want to see the price stabilize above the neckline. You can see, of course, there is a neckline here. There's a level 3. We are still doing level 5, and it can go on into this ending diagonal for as long as it wants, and therefore we still do not have a confirmation. We need to break the first neckline, and this is, of course, an hourly time frame, very big. We usually, in order to get a confirmation, you want to break a neckline on the minutes. So let's take it to 15. Of course, the same neckline. And this comes in at $78.23, comes in at $78.70, $78.90, meaning in order to break higher, in order to get a confirmation, you want to take out the 200-point moving average on the 15 minutes, take out the neckline, and then we have a confirmation. On a full back, we see all of these bit of shoulders. We can buy at that point $77.50, $77.70, $77.80, and hold it to across the end of the week into next week. Are we going to get $84? Doubtful, but we may get to take $2 profit for the internal cycles, as has been already explained earlier. It's possible to hold the trade until the end of the week on the premise that it would be an intra-week trade. If we break the neckline here, this is the neckline that we're looking at, 78. Can we get 82? Can we get 84? Technically speaking, we should at some point attack 84. Upper boundary of the leading diagonal that we get to see on the daily chart. But is this possible to be done in 1 week? We're not really sure. There's no demand at this point. All right, so we will aim to take the longs at 75 by limit entry long of 75.50. Hold it across the end of the week. We still have 48 hours to do the long tomorrow and day after tomorrow. Again, hold it across the end of the week and attempt probably to take it to $80, $82 at the most before we will need to recur the trade. Are we seeing a vice and is this going to be a reversal? We really need a confirmation to break above, see higher highs. You'll be always seeing lower highs on the way down, always lower highs. So we need to see higher highs. We all need to break the neckline. It's best to go on a confirmation, of course. At even 79, the bottom here is 77 actually, so just $2 or $2.50 of risk. All right, so I believe this brings us to an end of issues and questions.